Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Thursday, September 19th, 2024. Well, compared to where the market got left by U.S. traders yesterday and to where the Asian markets, followed by the European markets, decided that yesterday's rate cut by the Fed was a much more encouraging sign for the markets to rally. And so delayed effect, maybe, because by the time it got back around to New York for our own market opening, that the market was set where the ETFs, i.e. spiders and the Qs, along with the cash markets, the NDX and the SPX, were set to gap big. And let's just go take a look to see what that looks like. It doesn't look like much, but you have to consider that this is where it closed and this is where it opened. It was a huge gap. As a trader, it was a very big gap. But the market remains below that 20,000 level, which we need to get above to really, dare I say, bring health to the rally or give more conviction to the rally. Because if this indeed is the minor fifth wave going up, or even an irregular B wave, there needs to be more power in getting it up out of this area. As long as it continues to be viewed or looked at as the possibility of an inside job, so to speak, where the market just kind of, this no longer, because that was broken, so I'm sorry, let me take that off. But we can keep that in as a trend line for if downside were to come in and this trend line got broken, it could, and I would imagine we could probably associate it at the time towards some strikes within options and some levels within all of the markets that could signal a much stronger decline being underway. So again, as I'm looking at this, I'm trying to also put together, okay, today was awesome to the upside, no doubt. And it took all day to basically within the last hour before we got some really decent downside pressure. And so I'm going to go with the fact that I'm going to go back over, let me go back over to the futures market where I have it all laid out. I am going to go back and we're going to open it up on the daily. So let me bring it down a little bit. Let me tighten it up, bring it down. Okay, so having it still, the minor 3, the minor 4, we're inside of minor wave 5. It's an upside wave. And we're in, the best that I feel right now, minute wave 3 of minor wave 5. So we're in the halfway, or the strongest leg of. And if I'm counting correctly and to the right degree, then as I bring this down to the 1 hour chart, I've got it as minuet wave 1 of minute wave 3 of minor wave 3, minor wave 5. So what that suggests is that we're entering in to what should be the strongest and the longest. Good kickstart today, actually, very good kickstart today. So how do I want to view this? Again, bringing it down. So I've got to bring it down, and you can see that the size of it, but we can see that it's 1, 2, 3, 4, likely 5. I maybe could put an additional 1. So we got 1, 2, and then a 1, 2 inside the 3. It puts more dynamics behind it, but now it's up to the market to kind of give us that crisper look. But even if I open this up, we got to take a look at that. That does not suggest we're going to turn and run. Now, could we? Yes. I could. 1, 2. No, depends. If we break below this, I would have to question whether it's going to end up being like a 3. So in other words, it's like 1, 2, 3, 4, and then we go up in a 5, and then it gets labeled wave 1. Or I can put it through as like 1, 2, 3, 4, and this is a 5, put a 1 above it, and this is wave A of that wave 2 correction, right? And the dynamic of this particular move, even from here, because I could take it from here to here, and we could look for. Right now, that's only taking it from here to there, and this would be a normal pullback, 20,002, 19,940. Now, I think what I will add at this stage is what I still consider giving more positive spin to this rally versus the reaction that we really got from here, from the US traders. It was very so-so, because we ran up, we gave a very strong kickoff, and then come all the way down and put it in a new low below from where it started pre. Then we started to, put in a little bit of a climb late in the day, and then once the Asian markets opened last night, it did fly a little bit. Then they brought it all back down again, and then the European markets opened, and that's when we really started to just kick it into gear and get up until we reopened, and then we gapped and just kind of went. So, but good rally, tradable rally. So I want to just get into the nuts and bolts. So I'm going to give, as a trader, this is what I'm going to be looking for tomorrow. We have that possibility now down the 15-minute chart. Got the 1, 2, we're inside a third wave. Minuet, wave 3. And so it's really going to be tight to say, could this be 1, 2, 3, 4, 5, wave 1 of that 3? So sub-minuet wave 1 of minuet wave 3. So breaking it down even more, that could leave us into 2 positions. That if it is, then this could be a wave 2. And wave 2, actually, these would be the same type of levels, sort of. Nah, they wouldn't be. Let me just, this would be as if this is 1, 2, and this is 3, and it's coming off in a 4. But I'm going to leave that questionable right now. And I'm going to take this off, and I'm going to redo it. This is for more upside, but now I want to see if we're taking this from here, and this is the other part, as wave 1, yes, it would fit cleaner, but you can see we can dip pretty far and then jump in a wave 3. So we can continue to have pretty volatile trading. And this is what the volatile trading is actually doing. So part of today, getting that launch, is because all of these options positions that were presented last night as volatility triggers, as call walls, as larger gamma positions, which suggest there's going to be an additional strength being put behind the rally because of what the gamma was suggesting, what needed to be done. So I already felt that coming in this morning that if we weren't above those, say, for example, in the Qs and in the spiders, we were above volatility triggers. We were above call walls. So that automatically just pushed everything into high gear because of what needed to be covered. Now, and it worked, and it was great. But what we're really confronting now is it doesn't take much to bring them back down and put them back through volatility triggers, put them back under call walls, put them back under levels that would really kick that risk on trade back into high gear. Push it into a safety zone where everybody loads up on it, because for sure we're going to go up. But as we see and we get pushed around volatility wise, then it becomes a little bit more difficult, because the options of what could really happen once I get snuffed out, the other side picks up speed. So until we can really clear and hold above, so that's what I'm getting to the point I'm saying is like in the NASDAQ, closing above 20,000, I think is a positive for continuation. Even as a wave 2, I think we can come down and spike back up, because that's what I would look for. I'd look for a more shallow wave 2 if the underlying strength is to push the market higher. But again, here we have another thing. We have an options expiration tomorrow. Number one, it is the monthly. And number two, it is, of course, a Friday. So it's 0 DTE as well. All of that comes into play tomorrow. So we could see, again, an increase in volatility where the market moves up and down through triggers. So because the options are going to be trading more freely because they expire tomorrow. All right, so what's our possibilities? I'm going to go back out. I'm going to leave this right now. I'll leave that on unless it gets in the way. I'm going to go back to the hourly chart so we can see more. Yeah, I got to get rid of it for right now. Because now I'm going to be looking at the upside. So what does the upside say? Okay, so the gold, that's going to be on the sub level. And right now, we're kind of looking at this one is kind of looking at what I'd be labeling inside if this is 1, 2, and this was a 3. And then again, looking for the 4. So the 3 actually surpassed 1.618. So if it kept going, then that was next up in line for that one. But I'm feeling pretty much, but I'm going to leave it open because it could be 1, 2, 3, 4, and then a 5. And then the inside here, I think that still could be a 3, a 4, and we get another 5. So we have still the opportunity to go there. But ultimately, right, let's go look for where this third, where we're projecting. The fibs are projecting at least that wave 3 would be equal to wave 1, which was pretty big. But this one's going more vertical, rather taking more time. It's going more vertical. And if that continues, it shouldn't take us very long to get to 20,888. We got to 20,002, 20,020 today. Actually, no, 20,203. So to go an additional 600, again, that's a big move, undoubtedly. But we're inside a third. And I don't know exactly how they want to play out for expiration. So that, but it's there, it'll sit and it'll continue to be a third wave until we get some clarification that something is complete. Failure to kind of get it up there is going to really put a lot in jeopardy inside this whole thing, which is why I do consider then continue to look at this could just be wave 1 of this third, suggesting we will get there and beyond. So, and again, as I've said before, I'm also kind of looking for, go back out to the 4-hour chart, I'm looking for this wave 3, to definitively get above this wave 1. Definitively, and way above. There's the 100%, 21,269. For this third in action to be equal to this first wave, 21,269. Ultimately, the call would be that it gets up here. Now, keeping in mind, see these over here? That continues to suggest it's an A, right? So the 4 comes off, minute wave A, minute wave B, excuse me, minuet wave A of minute wave B, minuet wave B of minute wave B, and we're going up in 5 waves to complete a C wave. Now, it would stay a flat if we fail to get above 21,213. That's the high that this section needs to get above. One, if it's going to prove that it's in a regular B, or it's if it stays under, it could just be a big old flat. And this could be A, B, C, B, and we come back down in a C wave. So this minor 4 is not out the window just yet. That's why I'm leaving these on. So it's not out the window yet. But I'm leaning more simply because of the intensity of how we went through these levels, that should continue. So the head fake to me would be that they fail, that these crosses fail, and that truly the underlying breadth of the market is negative. So that would be a cleaner reaction as to what kind of was expected, that, okay, we're going to get a rate cut. If we get a 50% rate cut, or 50 basis point rate cut, well, that could just mean that there's a little bit of worry, blah, blah. But my point is that if the market was trying to plug in and gear up the where they were placing positions and options against these stocks, well, then it would have been bringing it down. So yes, it can. And a lot of it could be just done tomorrow to finish that expiration. So I'm not giving up on either one. They have to run side by side. But as a trader, there's plenty to do. Swing trading, option trading, and just trading the futures. Not always the easiest, but there was enough and the volumes weren't that bad that we could get in and out, or I could get in and out. And even if I took a loss, I could make it back and then move it over to a profit. So there was enough trading and the volume was good enough that you could do it. All right, so back to the NASDAQ. For tomorrow, I'm going to bring it all the way back down, at least to the hourly. I believe that we are kind of looking at the potential that it's 1, 2, 3, and this is a 4, and it really should stop and we should go back up. So that would be a big thing for me if it doesn't. The other way that I can count it, and we saw that when I took it lower, was 1, 2, 3, 4, and this is a 5, and it's wave 1 of 3. And then we're in a 2. I'm going to put up those fibs on both. If this is wave 1, we're going to be taking it from down here, right? And we're going to be putting up, give it back. We're putting up these. Now this is just the straight fibs for a wave 2. 382, 19,960, 50%, 19,885, 62%, 19,809. Indeed, if it is, this is all wave 1 of 3, then yeah, I can come all the way back down to there and turn and run all the way up all over again. Now, as a day trader, even a swing trader, or somebody that's in this thing every day, these types of moves play havoc on your mind. Because you're like, oh yeah, the market did this, we're crashing. Because in essence, a lot of times during the day, that's what it feels like. Because the moves are so quick. But because these algorithms are firing in both directions, we get these turns and these flips, and they, because the moves are bigger, so the pullbacks are also, or should be, bigger. So again, this would be for a wave 2 if it's all done. If it's just 1, 2, and this is 3, and it's a 4, that one is as follows. And I'm going to add again. Now these are just for a 4th wave. We have, it's already reached 0.236. That works. 382 is 2002. Again, hanging about and above 2000 basis to future. If it holds, we start to rally again, it is going to look very much better for the upside to really continue. Then we'd be looking for a move possibly up to 20,400. So again, another plus 400 day. And it's possible, once again, not really sure what sides they really want to take when it comes to Apple, AMD, Amazon. All these stocks have made huge moves today, right? Not only the Mag 7, I mean, Meta up 21. So Meta pushing. We got new all-time highs and really kind of just forcing a lot of something over there. All right. Now, I want to move it back out to the daily. I'm going to take off this. That one. Fib. So I want to open this up and I want to take a look at the moving averages. So I actually need to take that off because I really don't want to look at the moving averages. So let's take a peek. Here they are, the daily. Beautiful bar. What did it really do? If I had to say, you have to really consider, look at like, where was the strength? Seriously, right? Here's the daily 50. It is turning higher, but the 20 I would have thought would have crossed it. The 13, yes, of course it did. But the 20 is just getting ready to. Failure from here would just bring it in flat and then get it turned down again. So caution, right? So what am I looking for? What would that lean towards? Well, we should get some follow through to the upside, but it keeps in line A, B, C, minor 4. All right. I'm going to leave that as it is for right now. I'm going to go over to the S&P. Same thing. And what the discussion is, and what I'm really trying to do here, folks, is I'm trying to just keep it more towards for trading and more geared for day traders, swing traders, because I'm going inside all these moves. It's not like, yeah, we should end up on the day, et cetera, this should continue to rally. And so having a long position over a period of time is fine. No, now we're playing against the volatility, against everything that happens on an intraday basis, including all these different levels that really do control how these indexes and ETFs trade, what their direction will be. So, all right, ES on the daily, let's just take a peek here, because this one these are new all-time highs. Now, here's the other dynamic or just this huge difference between the NASDAQ and the S&P. Yep, the NASDAQ had a great day. Dow had better. Dow hit new all-time highs. So did the S&P. That's major, right? So the S&P fits much, much cleaner in that it is finished with minor wave 4. And we're going up in a minor 5th wave also to complete. So, but it's so bizarre because I still have to keep alive the irregular B, right? We've surpassed the flat. On the daily chart, you say, oh, not by that much. But this high was 57.78. This high was 57.97. So, not massive. Getting itself over 5,800 would have been wonderful, but it didn't. Anyway, still could be ABCA, and we're in a B wave up. I don't know. It would have to really turn and fly lower for me to go like, oh, okay, we still will use it as a flat, slight irregular. But we have to still consider a move up to 59.21 or 6,000. And it's an irregular B, and this would be A, and this is A, B, C, B, and then we come flying back down. That's still alive. Otherwise, market, if you're going to be in this one, 1, 2, you're in the 3. You're in minute 3. Great start. Not bad. But these little sideways days, they got to really start building a string of solid upside moves. That's going to give the strength to the rally, obviously. And again, flip a lot of positions. So that's what could give the boost, but something's got to do it. Something's got to get underneath there and support this market to move higher. And we are in new all-time territory. New all-time highs. So you better have a reason as to why you're doing it other than, well, volatility, blah, blah, blah. I agree. If we're going to leave it to a technical picture, it can tip and turn over just as fast. Bear in mind. So when people are looking for a reason to connect to why the market's going to rally, you may not find it. Not one strong enough. But technically, sure. Flip, turn, and the positions will change. It's just flipping money around to something else. It's not really having any comment to say about what the Fed did. Yeah, great, thank you. You made cheaper money. Yeah, good. And you're promising to continue. Great, fine. But we're making money every day just by flipping positions around. So that could continue. All right, here we are. Current count. I am looking that this is going to be minor wave 5. I continue to favor it. And it at least is 50-50 with the irregular B, and then slamming back down to here. So this one, minor wave 5, we would be looking for a solid move above 6,000. And we'd start looking for 62, 63 before the intermediate 3 and actually the minor 5. Minor 5 projects Well, I didn't put it up. How about that? I will get that done. Minor 5 would likely project for 63 to 65, somewhere in there, or even up to here. Although I wanted a little bit different than that number, but maybe, 65, 6,600. And then come down in an intermediate fourth wave correction. So sticking within a minor 4 correction, you're not looking for a whole lot. I mean, yes, but in terms of that type of height, no. And then a return back down to here. And then it goes back up and maybe gets up to here, and then it comes back down to wherever this 4 finishes. If it's here, that's where it's going to come down to. Or if it's here, that's where it should come down to. And then we go back again. All right, inside this thing, what's it look like? Similar to the NASDAQ. Let me just put it here because this is what we're looking at, okay? So, yeah, all right, I'll just take it to the 4 real quick. So you can see ABC minor 4, wave 1, minute wave 1 of minor wave 5. Beautiful, by the way, beautiful. And we come down in minute wave 2. So we're in that minute third wave. And if you really look at it on this 4-hour chart, I'm not complaining about how that started. That's what you want. Look at that. That's what you want. That's what we want to see. A little pullback, of course. But I need more of this. It really, to me, it needs to go vertical. If it's going to get up there, it needs to go vertical. That would be more technical than anything else. Fundamental, they're going to run out of reasons, because what we move to from here is now we're going to start getting ready for end of the quarter, September. Well, actually, it's going to be September the 30th because it's a Monday. So that'll be the end of the quarter. But then, we have the monthly tomorrow, and then we have the end of the quarter on Monday the 30th. And a lot can happen in between, and all be related to where the capital is flowing, where the options flow is taking it. So in here, if it really, to me, technically, to continue with the intensity and to get this thing up to where it truly is intending to go, first of all, it needs to get above that high, 57.75. That's the existing high basis, the December contract. It needs to get above that, and substantially. All right. So wave 3 would equal wave 1. I got it up here somewhere. Can't be that high. 100%. Is this wrong? I think it might be. Let me just check something. 1 and 1.618. 57.27 versus 54.51. 27. And that's here. 54.51. All right, so it goes from there up to there and down to there. So this should be a different color. My apologies. Let's try it in this color and see if that doesn't work better. Yep, you get to see my whole process. Sorry. All right, so if we're just looking for this wave 3 to be equal to wave 1, we're talking 59.75. So that's 200 points from here. So it made a decent move today. I wanted to do the same thing again. Get me in the hood. Get me either to one of these or in the hood and above to disqualify those, and then we know exactly that we're headed and we can pinpoint some different things. Right now, if we're in that 3, taking it out the daily, bringing it back to the hourly, this is perfect. Because we got the pullback and then it just roared. And we got a pullback and then it just kind of pushed. That's what I want to see. Pullbacks are going to happen, but they got to push. Now, so what I kind of think here, if that's from that low, 1, 2, 3, 4, 5. So I think here in the S&P, it is wave 1 of 3. So that's why when I'm comparing it to the NASDAQ, it's like, well, no, you still look like you need a little bit different. But in the S&P, I go 1, 2, 3, 4, 5, wave 1. So sub-minuet wave 1 of minuet wave 3, coming down into 2. So we measure as follows. And I'm going to add this, and it's just going to be there. This actually can come off because that doesn't work anymore. But here, if we're going to come off in a wave 2, I can open that up a little bit this way. It hasn't even reached 236, right? So shallow still, but we can come 57.50 in that hood, and then 57.35. Wave 2 can go 62%. That would bring it all in 57.21. Other things standing right in its way. We have beautifully rising, slightly going sideways now. 20, an hourly 20 at 57.60. It should provide some support. And that's 14 points from where we are. Then we have the hourly 50 at 57.31. Should start to, if it's continuing to go down, this should go flat and provide even more support, as will this, which should even provide a nicer layer of support. And then we have these fibs right below it. So I'm thinking that wave 2 goes, and then we start launching again, similar. And again, tomorrow, no economic data. So it's all going to be expiration. And that should be enough, to be honest with you, should be enough. So removing that, that's about, I mean, I have to be honest with you, that is where I'm going to hold for right now, because I think that, and I'm just going to change this color because it's going to be a gold. Come here, take that off, 236, because it's a sub minuet, wave 2, 618, and do that. Take these 2 off, say okay. So there's for our wave 2, if this is 1, 2, and then we have 1, 2. So again, what I put up here so that it stops being confusing, I'm just going to add the first, put it in, and now we will be good. And it's a little bit cleaner. I have to tell you, it's a little bit cleaner here in the S&P than it was in the NASDAQ. Because now I'm just thinking, yeah, that makes sense on the 2. And also the NASDAQ. I can, like I said, I can count it out as being wave 1, and that's what it looks like I'm going to have to do. And what's leading it? The S&P and the Dow. All right. And moving averages, they all look the same. Yeah, RSIs look pretty good. Even on the hourly, it does look like it should still come down a little bit more. We'll see what happens. But these levels, I definitively would suggest that it holds itself above 57 now. And I'm sure, let's see what the actual numbers are going to look like. Because again, the S&P, spiders are doing the same thing. They broke above levels that should have really built on it, and they did. The SPX gapped this morning, which really kind of fills in a lot of banks, and also now leaves the gap. So, and that's about it. I'm going to leave it right there. There are no economic data coming out tomorrow, no reports. And from what I can tell, FedEx kind of bombed. And I'm not sure what this is, because every time that I get there, it only turns green because it made itself above there. But if it goes below, then this whole thing is red. So it went here, went zipped up, and came all the way back. And now is really FedEx first quarter, not nice. And came in way below what the expectations or the estimates were. All right, so that's FedEx. So what that's going to do to Mr. Dow and Mr. S&P, I don't know. We shall see. Have a great evening. The next daily update will be on Monday, September the 23rd. And I will do a weekly over the weekend, most likely Saturday. And also, just to kind of put here, just to put the bug in everybody's ear, I am considering, I am electing to now move the channels, my YouTube channels, over to membership. And so I'm just waiting to be working with YouTube on getting that accomplished. It's going to be very, very fair priced, and it would include the daily plus the weekly. And so there'll be a membership that would be so much per day, so much per month. And so, but I want to just make sure that people understand it should be very, very affordable, reasonable to receive this data. And what I will include is what I have at the moment on the levels, put more of a discussion into how options are truly taking over as the underlying and not the derivative, because they have more control on the daily movement than I believe people are actually giving credit for. All right. Have a great day trading tomorrow and have a great weekend.